Hey, folks, welcome to InTheMoneyStocks.com's verified investing education. My name is Gareth Soloway, Chief Market Strategist and Master Trader here at InTheMoneyStocks.com. In this educational video, we are going to look at gap fills. I want to explain exactly what it is so you guys can use it to profit. All right, and I use this on a daily basis to make decisions on swing trades or even on day trades. All right. Now, it's important to go over the keys that make up a gap fill. Generally, gaps don't occur on an intraday basis unless a stock is halted. All right. If a stock is halted, then obviously news pending, it might open up $5 higher or $5 lower, creating a gap. That's the rare, unique situation. In general, gaps occur when a stock closes one day and then opens sharply higher or lower the next day. In the situation of Netflix, you can see it very clearly here. We had a close here around 362 or so, and then the next day it opened sharply lower below 330. Okay, this is a gap right here. So gap fill is essentially when price in this situation rises and fills the level to where the stock closed prior to the big open lower in this situation. All right, so if it price grinds higher or rallies higher and goes right here, that would be considered a gap fill. That's super, super, super important, folks. Okay, please understand that. Okay, on the reverse side, a gap can be the other way. So you could have a sharp gap higher, in which case price has to sell off to come into the gap fill the other way. In fact, we can quickly go to an Apple chart and I can show you a gap here. All right, so here's Apple. Here on this particular day, you had a close here. The next day it opened here, creating this little open area known as a gap. Gap fill would be when price falls on Apple to the price that it closed at that day prior to the open higher. All right, this would be where gap fill is. All right, couple things that are important about gap fills. All right, gap fills in this situation, you have to understand what's resistance, what's support. How do you trade it? When you have a lower level and a gap higher, when price were to sell off, let's just say Apple sells off down to this 221 area, that would be technical support. I would be looking to buy this. On the Netflix chart, if we flip over to Netflix, if price rallies up into a gap fill, you would look to short it or sell your position essentially because this is now resistance. All right, gaps oftentimes are support or resistance. In fact, they always are. The bigger the better, I find. So this gap on Netflix is monstrous. When you get back to this level, there will be a huge amount of resistance. There will be a huge amount of selling. The idea behind this is very simple. There were a lot of people that were, here was a pullback on Netflix. It was near the all-time highs, right? So Netflix is just pulling back. People are buying it, thinking it's going to make another move up. Then the stock gets crushed. All these people are stuck underwater. They're just, oh man, this stinks. They're feeling how bad it is. They're losing lots of money. The stock comes up. It continues to rally. They get basically back to break even. What are they going to do? All right. The psychological aspect of this is that they're going to want to sell. They're going to be like, oh man, I avoided a catastrophic loss there. I'm going to sell. That creates the wall of resistance right here. So anywhere in this range, at once it hits gap fill, they're going to be like, okay, sell, sell, sell. Thank goodness I got out of this with either a minimal loss or a flat out. All right. On the other side of the coin, the same thing applies. So you have shorts that have been shorting this whole way up, right? So as Apple falls, they get back in. I mean, think of all the people here when Apple was, this was a big level, right? You have a lot of resistance here, here, right here. You can even put a trend line right up here. So right in this range, right around this gap fill, there's a ton of people that were shorting the stock. If the stock comes down there, they're going to start to cover, which is forcing buying. That's the psychological aspect behind gap fills and their importance. Okay, it's people that essentially got in a position, then they were out of the money significantly. Finally, they get back to break even. They say, thank you very much. They exit. But again, that causes a reverse of the stock. Traders like us and swing traders, I'm a swing trader and a day trader, we utilize this to play the opposite way. So, for instance, if we go to Netflix, let's go to Netflix. If this were to rally up here, I'm going to look to short this level because generally 9 out of 10 times you're going to get a pullback from this point. Okay, if we go to Apple, and I know I have a bunch of lines on the chart, let's try to minimize a few of them here so we don't have so much. But if we just keep that gap fill there, this gap right here, and this pivot, notice how it coincides with that pivot and all the consolidation. All right, if we get back to that level, I, as a swing trader, understanding the psychological aspect of what the people, the general investing public is going to do, they're going to cover their shorts here. I'm going to be buying there knowing that there's a lot of support because there's forced buying from the short covering to get it to pop back up. And I would look for a bounce there. And again, you can see all the little support lines along that same area. So that becomes a significant level. So I want you guys to be clear on something. Sometimes gaps are filled the next day. All right. If they are, they're usually not a swing trading opportunity. It's more of a day trading opportunity. Once they're filled later on, like a week, 2 months, a year later, that's where they become potential swing trading levels. They harden. Think about, putting cement down. If you run on cement after it's been laid, you're going to leave footprints. It's not hardened yet. If you step away for a day, a week, whatever, it's hardened into a, hugely, strong level or formation, and then you can actually utilize it to jump off of or step on without causing any issue. And again, that's the idea. In general, I have found that the bigger gaps, the better. So, for instance, this level on Apple is a good level because it has other pivots along with it. So, all this consolidation is telling you that there's tons of support here. The gap itself is decent. All right, it's an added factor, as I like to call it. Therefore, it would get me to buy here on Apple if it comes into that level. But I want you to understand that the bigger gap is the more strong one. So Netflix, for instance, this is a huge gap on Netflix. This would actually be more powerful. Notice how by itself, there's not really a lot else up here. I mean, up here, there's like a double top. But at this particular level, this is really the only one here. The only point of interest, the only factor here. That's okay in this situation because it's such a big gap. The bigger the gap, the stronger the level when it gap fills, essentially when it fills that gap. All right. If it's a small gap fill, you want to make sure you have other factors in that range. Very, very important here, folks. All right. Just a shout out real quick. At inthemoneystocks.com, I run verified investing alerts and verified options alerts. I encourage you to come and get the live trades. As I put them out, I send alerts out with exact entry, exits, stops, targets, all that stuff. You get it live, text message, and email alert. You can log in and view my videos every single day. I do a video every single market day. I post educational videos a couple times a month teaching things like this, although even more in depth for members. And I want you guys to be able to essentially become a knowledgeable investor and trader and then also profit off my trades as I'm giving them out. I've been doing this since 2007 with membership. Members have made millions and millions of dollars off my calls. And it's a beautiful thing, folks. There's not many websites out there, services out there that have been around since 2007. You can check out the track records on each of those pages and so forth. So encourage you to come check us out, come join my services, and I hope to help you make money in the future. Take care.